Bitcoin ETFs, we still get emails, folks, I can't tell you. It's yet another deadline. Go ahead, laugh, Matt. That's why we have you here. It's another deadline for a long-delayed Bitcoin ETF. After turning down application after application, the SEC is expected to issue a ruling by next Monday on one of the last Bitcoin ETFs that's still outstanding. This one from Bitwise Investments. Fortunately, we have an update from Bitwise's Matt Hougan. Matt, it's hard to describe what a long and winding road this is. Are we any closer? You've spent a lot of time at the SEC explaining your model. Are they any more receptive to the idea than they were a year and a half ago when they basically shut the whole thing down?
Oh, absolutely, Bob. You got to think about everything that's changed in the Bitcoin market over the last 2 years. 2 years ago, there were no regulated insured custodians in the Bitcoin market. Today, there are almost 10. They're big names like Fidelity and Coinbase. They have hundreds of millions of dollars of insurance from firms like Lloyd's of London. 2 years ago, there were no regulated crypto exchanges. Now, 6 of the 10 big crypto exchanges are regulated by the New York Department of State with market surveillance technologies in place. And most importantly, 2 years ago, it was a one-sided, inefficient market. Today, we have $200+ million in volume in regulated futures every day. Jane Street and Susquehanna and other big market makers are in the market. The market is trading at penny-wide spreads. It's among the most efficient institutional markets in the world. So not just the work that Bitwise did. Yes, we submitted a lot of research to the SEC and met with them multiple times. But just the evolution of the Bitcoin market over the last 2 years is from night to day. And that's why I think we're closer than we've ever been before to getting a Bitcoin ETF approved.
Now, about, was it January of last year, the ETF basically submitted what I call the 1,000 question memorandum, where they issued a long list of questions to everybody out there applying for a Bitcoin ETF. You've got to answer all the questions. And they went on and on. It was rather remarkable. But it fell into 2 buckets. One was, we have problems with these exchanges. Most of them are overseas and unregulated, and we have no control over them. One problem. Second problem is custody. We see break-ins. We see all sorts of problems with these with the way the custody situation is set up. Can you address those 2 core problems with the SEC and what your Bitcoin ETF now, how it would address those 2 issues?
Yeah, that's great. So I'd say custody is really a solved problem in crypto right now. As I mentioned, there are now a large number of regulated, insured custodians with hundreds of millions of dollars insurance in place. So I think that issue has just gone away over the last 2 years. I think the issue of market surveillance and market quality is the one that people are going to be focused on. We've approached it 2 ways. One, we did a lot of research on what the real nature of the Bitcoin market is. People's views of the Bitcoin market are often anchored a few years ago when it was a wild, wild west. So we submitted hundreds of pages of research showing that the market is truly efficient. But the key, Bob, is the growth of that regulated CME Bitcoin futures market. As I said, it's now trading $200+ million a day. It's about 20 to 30% the size of the total Bitcoin spot market. And that matters because one of the things the SEC said in that Winklevoss response that you referenced is that if there is a large, significant, regulated derivatives market trading side by side with the Bitcoin spot market, that can solve the problem of market surveillance. So the question before the SEC is whether that market is big enough and significant enough to sort of solve their fears of the unregulated nature of some portion of the Bitcoin spot market.
Matt, this is Tom. This whole thing is not going away. It's not a fad. There's a big desire among financial advisors to solve this requests from their clients to participate in crypto as opposed to them going rogue and doing something themselves. You and I have done a lot of research together in the advisor community. What would this ETF bring as far as stability for their average client?
Yeah, it's a great question, Tom. Look, the opportunity that's taking place in Bitcoin, crypto, and blockchain today is one of the most exciting wealth generation opportunities in the world. And you know that because Bitcoin is the single best performing asset over the last 5 years, up about 2,000%. And a lot of people think that will continue. The problem is, while big institutions have safe, secure ways to buy Bitcoin today in private funds that are available only to the ultra high net worth people, regular investors don't have a safe way. Their best approach is to take out their cell phone, dial up an app, hope they don't forget their password, hope their phone doesn't get ported. What the Bitcoin ETF would allow everyday investors to do is have safe, simple, secure access to the wealth generation taking place in Bitcoin and crypto. It would let financial advisors give it to their clients easily instead of them going rogue, is how you said. It's just trying to solve that problem of simple, secure access to what is emerging as a very important technology and a very important asset class in the market.
Reggie, we've talked about this before many times, and I think the problem the SEC has is very simple. It's the grandma problem.
That's
Is
correct.
it safe to sell it to grandma? It's one thing. The CFTC is futures. They view that as a different business. Those are professionals who want to buy this. But selling Bitcoin to grandma, I don't think the head of the SEC wants to get hauled in front of Congress 5 years from now with Bitcoin at $100 saying, are you the fellow who approves selling this to grandma? Do you think Bitcoin is getting close enough, the way Matt's describing it, to sell it to grandma?
Well, I think it really comes down to the views of the regulators. I think their chief concern is about investor protections. With the right mix of transparency and fiduciary responsibility to the investor, an approval will come. I think there's still a road to travel, but I think we're getting closer.
Okay. Tom, last word?
Well, I would say we look at inverse and leverage all the time, and I know you're not a big fan, but we've come a long way, and I think from an educational standpoint, if they approve something like this, a 2% allocation in a long-term portfolio
that's the argument.
isn't going to hurt you.
Yeah. Tom, just give us an update here. When is the ruling has to come down, and what do they have to say? Could they postpone it again? What's the alternatives here for the SEC?
Matt,
I'm sorry.
Yeah, so sometime before Monday, the SEC has to give its decision, yes or no. They have no more ways to postpone it at this point. We will hear clearly between now and Monday what they think. And then, depending on what we hear, we'll go forward from there. But it should be a very exciting week.
Can they say no now, but if you tighten this up, is it just a straight up or down?
Oh, no, absolutely. They'll provide detailed guidance. At least we expect them to provide detailed guidance on which questions they think have been successfully answered, which questions, if any, remain. So we'll know how close we are to the goal line, if we're all the way in or still a few yards outside.